Hello viewers, how are you all doing? I know you're all doing really well. Namaskara and welcome to the inaugural episode of Rupee Rakshak News channel. I am your host Ragurav. Every week, I'm going to take you through precisely those things that are important for you to grow your money and few other things to make the money part more interesting. Today, we start with our inaugural episode, which is an Independence Day special from Rupee Rakshak. Rupee Rakshak is a brand of FnO Investment Advisors Private Limited, a SEBI RIA number INA 2001490. So, whatever views we share on the financial markets for the week is from a registered financial advisor. And it's for your benefit and education, but this is not an investment advice. So if you need investment advice, you're welcome to go through our website rupeerakshak.com, contact us, and if you like our coverage of views and news, subscribe to this channel on YouTube. Now let us look at the derivatives market performance. This week by our derivatives expert Sumant Roy.
Hello everyone, this is Sumanta Ray from FnO Research Desk. Let me take you through the derivative data analysis of Nifty and Bank Nifty index to see what is the projection for the next week. As we know, market has been closing lower since last 4 weeks. Nifty has closed minus 99.75 points today as well, which is negative 0.51%, and Bank Nifty has closed on minus 55 points, which is minus 1.13%. So let us quickly look into the derivative data of Nifty. If we look at Nifty open interest build-up, we see 19,400 as the maximum Y, so which will act as a strong resistance. 19,300 has the maximum Y build-up on the put side, which will act as a strong support. But if we look at the second highest data, that is at 19,000, so the market, expectation is still a bit bearish. So that's why we are seeing that a significant build-up is happening, far down at 19,000. But we see that there are other significant build-ups at 19,200 and 19,100. So possibly, if the market breaks below 19,300, 19,200 and 19,100 can act as an intermediate support as well. And on the upper side, 19,500 has the second highest build-up, which is 50,000, 50 lakhs 81,000 contracts. So on the upper side, if 19,400 is broken, it may touch 19,500 as well. So right now, as of the current Y build-up, 19,300 and 19,400, market may stay range bound within. And if this range is broken, on the upside, there is a possibility market may extend until 19,500. On the downside, it may probably take some pause at 19,200, but below that, there possibility that it may slide down until 19,100 and followed by 19,000 as well, but which is less likely as far as my understanding goes. So let us look at quickly Bank Nifty, 24th August expiry. Bank Nifty, if we look at the maximum Y build-up is at 44,000 on the call side as well as on the put side as well. So possibility is that the Bank Nifty may consolidate around 44,000 range for some time. Of course, during the entire week, it may not stay around 44,000. So there is a possibility that it can break down or on the upside as well. So let us see where the possibility is. If we see the second highest build-up is pretty far down at 43,000 level, which is 8,72,800 contracts. So that shows that Bank Nifty market expectation is still quite bearish. Uh, but we see that there are other significant build-ups at 43,500 as well. So if market breaks between the consolidation towards the downside, there is a possibility that market may take a pause at 43,500, and if it breaks below, there's a possibility that market may slide down until 43,000. which is less likely. On the upper hand side, 44,000 looks very strong on the upper hand side, so it may act as a strong resistance. But if we look at the second highest build-up, which is at 44,500, so if 44,000 range is broken, there is a possibility that market can touch up to 44,500 level as well. So in summary, if 44,000 range consolidation is broken, so there is the possibility that market may range between 43,500 as well as between 44,500 range. So that is the overall outlook for this week. Thank you.
Thank you, Sumant, for the excellent analysis of the derivatives segment. Mohan, a lot of retail investors are venturing into trading these days. We see a lot more participation in the derivatives trading segment, particularly in options, mainly driven by the need to get rich quick, and motivated by the posts on Twitter and so on, where people are posting their fortunes, and then on YouTube people are showcasing the mansions that they have built out of the money that they made from derivatives, etc. On the other hand, the brokerages, because of a SEBI directive, they are also posting cautionary statements and risk disclosures and so on, saying people are losing money in derivatives. So many of our viewers have this question: being a retail investor or a trader even, is it safe for me to trade in derivatives? So what do you say for this?
Raghu, particularly for the retail investors, what I feel is this: you need to know what you are getting into. What is this derivatives? What is futures and options? What is it used for? A lot of people don't know what is it used for. It is not meant for trading. The primary objective why there is future contracts and option contracts, there are three reasons why people come into the derivatives market. The first reason is the arbitrage. There are price difference in the contracts. Let's say this month expiry contract and the price difference between the next month contract is very small. Especially the institutional investors, they take the advantage of the price rise to deploy money in the short term and make some extra profits. That is the first reason, arbitrage. The second reason why people come in is for hedging. Especially the investors like foreign institutional investors who have large exposure to equity and debt markets in India, if the market goes down or it goes against their view, they need some protection. So hedging is a protection. So if market goes down, you can protect the value of your portfolio, for which reason option contracts and future contracts, forward contracts, all these things are used. This is the second reason, hedging. Okay. The third reason why people would come into this is the reason what you told, that is speculation. Speculation, pure speculation, only traders will come in. They are expecting that some moves, big moves in the market. And let me tell you, derivatives is the most dangerous thing for a retail investor. A retail investor should never come into do a speculative trading, because all these are leverage trades. Actually, you are doing a trade of worth of 10 lakh rupees contract, but you are only putting 70 to 80,000 rupees.
Yes.
But you think that the actual profits is on 10 lakhs or actual profits is on, losses is also on the 10 lakhs. So imagine you lose 2% on 10 lakhs, 20,000 is the loss. But what you have given it as a premium is only 70,000. So your loss of 20,000 on 70,000 is almost 30%.
Exactly.
If it becomes, let's say, 6% loss on the actual contract value of 10 lakhs, you will lose 60,000 out of your 70,000. And you have no control in derivatives which side the premium prices will move. And it will move very fast. Before you can even exit the positions, you will see that the price have fallen and you are in negative.
Yeah, well, that has been the stories that we have heard.
And people don't realize this, and this is very, very important question what you asked. Why are we covering this futures and options? This is for us to know what is going to be the equity position. If you see Sumanji's the analysis, he is predicting the market based on the call writing and put writing. In the option chain, you know which side the heavy writers are there, either on call side or put side. If there are more writers on the call side, you know that that is the limit. So for you to predict where the Nifty will go in next 1 week or 1 month, you need to look at the contracts in that 1 week or 1 month. Then you know the range, what range the market will be moving. So that is the beauty of the derivative contracts. It tells what market is thinking through the numbers, that if there are lot of call writers and at the particular price level, let's say today is at 19,300. So it was explained by Sumanji. So how do you derive what is the price range? In next 1 week where the price will move, it is actually seen in the option contracts and the number of writers who are there in the call side or the put side. And this keeps changing. Everything can change in 5 minutes. What you predict right now, it can change in 5 minutes, and it has a huge impact on the premiums what you have given to the brokerage for buying those contracts. Like I said, 70,000 you have given, you think that it's okay, let me make 30,000 if it moves up, if it goes down, let me lose 30,000. But you end up losing most of it because you have no control where these changes can happen swiftly.
Even the capital could be lost.
Lot of people have lost capital because we keep hearing so many stories. And there are people who have lost everything. Because once they lose some 5 lakhs, 10 lakhs, to recover that they'll put another 10 lakhs. They'll think, okay, I'll recover in the next session, they'll put another 10 lakhs. And this is hard earned money, and they are in distress to recover. And they end up losing everything, and there are many instances where people have committed suicide because they have lost crores of rupees. And families have actually been disturbed because of this. Of course, if you are someone who understand all this options market, you understand the option grease, gamma, theta, and exactly how this price move happens, then ideally, if you really want to learn, then learn it for at least 1 to 2 years and don't put your money. Today there are a lot of techniques to do paper trading. Unless you get a continuous hang of what's happening in terms of price movements, at least for about 6 months, then you can start small with small capital. And today, let me tell you, this is the game of the institutions. The derivatives markets are controlled by people who have large quantities of stocks underlying. If you have huge investments, you have the power to play the price in the market. So as a retail investor, people think, let me lose 10,000, let it come. If it comes 20,000, if it goes 10,000. But why do you want to lose 10,000 is not a small money.
Certainly.
So my earnest request to all the viewers is, if anybody in your house, anybody in your friend circle are doing any option trading, please be close to them, ask them what they are doing, and they might be in trouble. And they may not even tell you, and many times parents don't know what the kids are doing, husband don't know what wife is doing, wife doesn't know what husband is doing, how much he has already lost. So please do discuss this, make sure you don't trade. Why do you need money? My question is, even if you want 10% in a month, what will you do with it? We will cover that in the other sections.
Yeah. So you are very strongly suggesting retail investors not to venture into trading in derivatives because there is no power of money, neither the power of prediction available to common people in the derivatives segment.
See, it's one, this is the lack of knowledge. You cannot predict the markets and you are taking undue risks. You think you are putting 10,000, which actually contract value is 3 lakhs or 4 lakhs. And when the price moves, your 10,000 can just vanish in 2 seconds. So you shouldn't do things what you are not meant to. And derivatives, as I said, is a tool for hedging. If you have 3-4 crores in the stock market, use derivatives to protect that 3 crore ka value. That's what we do in Rupee Rakshak. We do a lot of hedging strategies for specific clients, HNI clients, and we work out whenever the protection is required. So it should be used for what it is meant to.
So what you're suggesting is that hedging is a better way to do derivatives trading, but even then you should go through an investment advisor, somebody who is knowledgeable applying hedging for your money in
Right.
derivatives.
Absolutely.
Yeah. Whether you're looking for opportunities to invest some money right now, or you want to make sure your investments are doing well, you need to know equity, bonds, and mutual funds. We are covering these in our weekly updates to you. So please keep coming back to this channel every week. We bring you new updates about equity, bonds, and mutual funds every week. If you liked watching this news, please subscribe to our channel on YouTube and come back next week at the same time. We would be glad to see you here again. Thank you. Thanks again for watching. Signing off, this is Raghu.